do with a company like Vistra Energy in this environment? Here's a big Texas-based utility that just last week closed on its transformational $1.7 billion acquisition of Dynegy, which gives them some tremendous retail and power generation assets in the Northeast. Thanks to this deal, Vistra says it's now the lowest-cost integrated power company in the industry. And the stock's, well, just shy of its 52-week high. Now, Wall Street tends to shun utility stocks in a period of rising interest rates. People talking about a correction in this group because higher rates make their big dividends look less attractive by comparison. Vistra doesn't pay a dividend, which is one of the reasons the stock's been holding up so of late. The other reason being that this is a growth stock masquerading as utility, and I like that. So could the stock have more room to run? Let's take a close look with Curtis Morgan. He's the president and CEO of Vistra Energy, VST, get a better sense of where his company's headed, and now that it's finished acquiring Dynegy. Mr. Morgan, welcome back to Mad Money.
Hey, Jim. Thanks for having me again. Really appreciate it, as always.
Well, I've got to tell you, Kurt, this is a very exciting story because you are the low-cost producer, but I think a lot of our viewers are going to say, well, wait a second. I like utilities for dividends. That could eventually come down the road after you've paid down some debt, correct?
That is correct. And the one thing about our business, Jim, is that we generate significant free cash flow after servicing debt and after maintenance capital on the power plants. So we're a different story than other commodity-based energy companies in that we convert a lot of our earnings to free cash flow, which gives us a lot of flexibility in terms of what we do with capital allocation, including long-term dividends. And we believe that is something that we will take a hard look at. But I think debt levels are probably the biggest priority for most companies in our situation with commodity-based business and with the volatility that's associated with commodities. So we'll be focused on that first, but dividends are not far behind.
All right, so Kurt, one of the reasons I was trying to figure out, okay, how did the stock go up so much? It's been such a strong performer. Obviously, Dynegy's good, but you're in an area of the country that I think people don't recognize, particularly in the Northeast, that is really enjoying a great boom. Texas, it's been really unbelievable, hasn't it?
It really has. I mean, the great state of Texas continues to grow at upwards of 2% a year, which is more than double most other markets in the U.S. right now, especially with demand-side management that's going on in the country and conservation. So, and about 50% of our earnings will still come from Texas with our big retail business where we've got 1.7 million customers and a very strong generation asset base that produces a lot of cash flow. So that's a very important part of our story and will continue to be.
I am sure people will look at where your fleets are, what you have. You've got some coal, you got some nuclear, you got some natural gas, and they'll say, you know what? Maybe they're going to get a break because President Trump seems to favor coal. Can coal have a renaissance, or is it just a bleed-off?
I don't believe it's going to have a renaissance as much as I believe it still needs to be a part of the energy infrastructure around power. I believe that other sources are now catching up with coal in terms of the overall cost, and that includes renewables. Solar and wind and batteries, Jim, are not far behind. And so our company has to look forward. We've shut down 4,200 megawatts of coal in Texas because they just couldn't make it in today's world. And we've invested in a 180 megawatt solar plant in Texas as well, and we continue to look at other renewables as well as batteries. So I think it's on its way out. I know that others may not like that, but I do believe that it's on its way out. I
was trying to figure, in your conference call, you talked about how you are immersed in batteries. Obviously, when I think of batteries, I think of Elon Musk. I think of Tesla. What does it mean to be immersed in batteries, particularly in California?
Well, I believe that what's happening now is with the intermittent nature of renewables, when you combine batteries, with the intermittent nature of renewables, you can create a more stable electric product. And immersing the power grid with batteries gives a lot of flexibility around the grid itself, as well as the generation that supports the grid. And so I think batteries just open up a very different world, and they're becoming more and more cost effective.
Okay, just one last question. I know deregulation, it may be coal, no renaissance, but we do have a different EPA. What does a different EPA mean for a growth utility like Vistra?
I think there's a big change in just how we approach our business with the EPA. There was certainly a feel of I got you. They were continually looking to try to trip up companies and look for ways to really force companies that use fossil fuels, in particular coal, out of business. This EPA is actually trying to work with us and trying to work with companies that are in fossil fuels, which, by the way, are still going to be very important as part of the power solution in this country for the next 10 to 15 years at least. And so we just see a very different way of doing business with the EPA. They're trying to work with us. That doesn't mean that they're easy on us. That just means that there's a very different approach in terms of working with us.
Well, you've obviously done great for your shareholders. I think it continues. I want to thank Curtis Morgan, President and CEO of Vistra Energy, VST, for coming on the show. Thank you so much, sir.
Thank you, Jim.
All right, Mad Money will be back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.